Welcome back. Today, we're going to look at 3 trades that I took today, making over $8,000, a very big day here for me, and I want to break down the 3 trades that I took. One of them, the major one, was an SPX put option. I'll break down why I entered those put options, actually entering those put options in the pre-market on SPX. I was sort of looking at it as a futures trade, using SPX as my instrument to trade for downside for a SPY gap fill. I'll break down exactly my whole thought process on that trade. And then we're going to look at a few live trades from today, Tesla and NVDA. Both Tesla and NVDA were break and retest rejections. I want to share with you those trades live, explain why I took them. I hope you guys enjoy this video. I hope you learned something from it. Press that like button. Let's go ahead and jump into it. So guys, my whole trade idea behind the SPX trade and the reason I did take this trade was all behind the daily chart gap on the S&P 500 ETF. So coming into this week, we saw a gap up last Friday, and this is the gap that I was looking at, right here. Big gap on the daily chart. And when the market gaps up like this, it tends to want to fill that gap, right? This is something that happens quite often. Now, after pushing up and gapping up here on Friday of last week, we pushed right into a double top here on the SPY. This is around $444 a share. We had a double top on Monday, the half day of trading, and then yesterday, Wednesday, we could not get above that 444 double top. The other thing that I realized here was look at the volume bar down below. The volume was extremely low yesterday. It was a very weak attempt back into that 444 supply. So coming into today, I knew we have a double top on SPY, we have a gap to fill below, and if the SPY is to break below this daily candle right here, it would enter the gap fill. The low of this daily candle was $441.11. So I'm going to put a line there, $441.11. If we were to break that $441.11, that is where I would be very confident to look for a gap fill on the SPY, and I would use the SPX options to take advantage of this move. So if I go down to the 15-minute chart, you guys are going to see, right? You can see right here in the pre-market this morning, we flushed below that 441.11. I'm actually going to go ahead and turn off the after hours here so we can see that actual gap there on the SPY ETF in the short term. So this was the gap that I was just referring to. This is back on Friday of last week where we gapped up and we opened around that 441.11. So if the SPY is to close or is to break below that 441.11, right, I would look for that gap down and that move to the downside. You can see if I go ahead and put back on the after hours trading, this actually happened in the pre-market, and this is where I did execute my SPX trade. So you can see here, this is right around that 8 o'clock time. We broke below that 441.11, and after breaking that, it was pretty much a straight downfall. The reason why I was so confident to take this entry was, one, the double top on the SPY. So if I go back to the 1-hour chart, you are going to see this double top on the SPY, right? This was step one. I knew we had supply above. I knew that the sellers were stacked up here at 444, and I knew the day prior, which was Wednesday, we had a very weak attempt of breaking that level, and we rejected it once again. So that was one, right? That added to my confidence. Number two was the gap fill, right? We had a big gap up on Friday of last week, and I knew if we entered that gap, we would have the downside continuation. The third thing that kept me very confident in this trade actually comes down to the S&P 500 futures and what they were doing this morning. Now, this is exactly where I had my stop loss and was also the third reason I was so confident. This morning in the pre-market, you guys can see, this is the pre-market right here. I'm actually going to turn this I'm going to make it gray so you can see. Here's the pre-market this morning. And what was the ES futures doing this morning on in the pre-market? It was rejecting the previous day lows, the previous day pre-market lows. Look at how perfect this little break and retest of previous day lows was in the pre-market this morning. So when I entered these SPX put options, you're going to see when I enter them, I'll pull up the timestamp on the screen right now. I entered them really early, around 6:30 a.m. this morning Eastern time. I knew that I wanted to enter this trade. I wanted to have a stop above previous day lows, previous pre-market lows. As long as we're below that, I'm very confident in the downside continuation. And I knew that if we entered that gap, we would have a very aggressive sell-off. Those were the three things that got me into this trade: the gap fill, the 444 supply double top on the SPY, and also the fact that the S&P 500 futures were stuck below the previous day lows, signaling weakness here on the futures contracts. Now, I don't have my entry here on SPX recorded live, but you will see it running. I left one contract running into open. You'll see it on the live trades when we talk about Tesla and NVIDIA. I know a lot of people are going to ask the question, can you trade SPX pre-market? The answer is yes, at least I know on Interactive Brokers. I can't speak to other brokers, but with Interactive Brokers, you can trade SPX pre-market. You have to use limit orders, and you have to put it to an extended hours order. So extended hours order and limit orders is how you can get executed on SPX options in the pre-market. You'll see on the timestamps, I'll pop it up once again, entering around 6:30 Eastern, exiting some around 8:30 Eastern, and then holding the rest into the market open. So the next trade we're talking about today is Tesla. I do have this one recorded live from entry to exit. 280. 280 was the level today, right? That was the level we talked about in the pre-market live stream. 280 had multiple reactions, right? 280 here, 280 here, 280 here. We had 280 all over the place on this Tesla chart, and 280 was the pre-market lows this morning. So we can see here when I zoom in, this is our pre-market low, right? I'm going to go ahead and turn on the after hours so we can really signify that 280 low. You can see this was 280 here that had a lot of consolidation. We broke below that about half an hour before open, right? We broke below the 280. I talk about this all the time on the channel. If you break that into the pre-market and at open, right, I am looking to see, do we get a pop back into that 280 and do we reject it? Talk about this nonstop on the channel, right? If you break that consolidation in the pre-market, you break below it, you look for the retest, you look for the rejection, right? Break and retest rejection of previous pre-market lows, you popped right back into it and you rejected that supply beautifully. I'm going to go down to the 2-minute chart so I can show you how I traded this Tesla. I'll zoom in, right? You can see right here. You can see we popped into that 280 level, the pre-market lows. We had a pop into 280, and look at that 2-minute rejection candle right there. Nasty 2-minute rejection candle right at the 280. I mean, perfectly. The high of this candle was 279.97 cents. It was 3 cents off the 280 low. You can see a perfect rejection candle. I got inputs here, and I rode this thing out to the downside. I took one contract off at 100%, and I am still holding one contract. I don't really care to hold this contract. It's not that big of a deal to me, right? It's a really small amount. I have more than enough profits to be okay with me losing the total value of this one runner. I am still looking for more downside on Tesla. I'll talk about why in a second. But 280, break, retest, clear as day rejection there at 280. Very nice. Taking your puts there. You guys know if you take your puts here, your stop is over 280. You know exactly this plan. You know the strategy. Break and retest of 280, stop over 280, look for that downside continuation, and scale out as we get the move. I have this trade recorded live, which we will look at in a second, but I quickly want to show you why I am still holding this contract. The reason I am still holding this contract is because of the daily chart gap on Tesla. I might be too advantageous looking for this in the short term, but I am definitely okay holding a few contracts looking for further downside. There was a major gap up here on Monday due to vehicle delivery numbers on Tesla. There is a gap down to around 265. If Tesla wants to fill that gap, I want to be a part of it. Let's go ahead and run the live recording. You can see exactly how I got into this play, all live, all over the voice chat in the Discord. Let's go ahead and run it now. All right, I think I'm going to enter Tesla puts with just a small little play. Really nice 280 rejection there. I'm going to watch this. This will be my next watch. I'm going to take a light Tesla put, stop over 280, and I'm just going to forget about it. 280 at 275 put, I took 2, and I'm just holding it until it stops me out over 280. Here's what I have. You might see some bounce at 275. If you get no bounce at 275, this could get bloody on Tesla. Up 40% on Tesla. If you want to take some profits here, if you want to do the smart thing is to take some profits here. I'm being greedy today because of my situation on the day. So just please understand that. This is probably a good place to take some profits on Tesla. NVIDIA bear flag looks fine. Tesla downside still looks fine. Still holding out. There goes Tesla. There goes NVIDIA. Here we go, guys. Beautiful. 63% on Tesla. 476. I have a limit order open at Tesla to sell at 476 per contract. That's exactly 100%. This is a great example of just better price action. All right, I'm out of Tesla. I'm out of one Tesla. Just got filled at 476. 100% trade there. So the last trade that I have to share with you today is NVIDIA to the downside, break and retest once again of a very key 418.50 level. Now, why 418.50, right? Where does this come from? Here's the reason, right? 30-minute chart over the last week of price action. 418.50 rejections, 418.50 rejections. Now, moving forward, 418.50 demand, 418.50 demand. So if we are breaking back below this double bottom and we are turning these rejections back into rejections, I'm taking a downside play, right? I am using 418.50 as my stop loss, right? I know that if we're breaking back below a double bottom low, that was a previous double top high. I know this is an area of an interest, right? And I want to see if I can play a rejection of this level if we are trading below it. So if I break this down on the shorter term time frames, I actually did trade this on the 1 minute to get a little bit more clarity here. You guys can see here is market open, right? And I'm going to go ahead and make this gray so we can get a good idea, right? Here is market open. We flushed straight out of the gates off of 418.50. I did not take a trade here, right? I don't chase the open. I don't trade the first minute. I don't trade straight down or straight up movement. Over the next 2 minutes, you had a perfect push right back into 418.50 right here. And look at that rejection candle, right? A perfect 1 minute rejection candle at that exact 418.50 level. And when I saw that, I'm in the trade, right? This goes back to trusting your analysis and not being scared of the outcome, right? There's always uncertainties in trading. This is something that Mark Douglas talks about in his book, Trading in the Zone. There's always uncertainties in a trade, right? But we have to learn to accept the uncertainties. We can't have paralysis, right, in our trading. We can't be scared to enter something that is aligning with our strategy. And when I saw 418.50 reject, I talked to the group today. It's almost like I don't have control of my hands at this point, right? I have to take the trade. It's aligning with the rejection. It's aligning with the strategy that I trade. I have to take it. And I have to accept, if I'm wrong, I have to accept my loss. If I'm right, I can be happy that I continue to trade the same strategy and I continue to be consistent. So we can see, you'll see it live in the live recording. You saw a really nasty rejection here at 418.50. And when I saw that, I was very quick to react. Got inputs here. You actually hear on the voice chat, I accidentally took calls. I quickly got out of those calls because that was pure mistake. I don't know why I was on the call side. I'm sure some of you have done this before. Got out for a $70 loss and then quickly swapped to the real position, which was the put position I was looking for. And we had a very nice downside move. Took some profits off into this, held a little bit, took some more profits later into this move. Ultimately, I did exit NVIDIA because NVIDIA just did not want to give up. It was a nice scalp to the downside, but really no continuation. But I figured I would share the live entry and sort of break down why I took this trade. This NVIDIA is starting to look interesting now. Look at this NVIDIA rejection coming in off 418.50. Ooh, I might miss it. Yeah, I'm taking NVIDIA puts. NVIDIA 420 put. Oh, I bought the calls. Oh, man. I'm in the puts, though. I added the puts, too. Selling the calls. Took a $73 loss. I'm in the puts. I'm in the 410 puts. Look at that rejection at 418.50. All right, I'm taking some off NVIDIA there. Up 15%. Nice little scalp there. Even with the drama that I had to go through. There we go. 24%, taking another off. Boom, baby. All right, so be careful here. If you're in those puts, you're right at the 20 SMA. I would be scaling out here. 20 SMA on NVIDIA. Could hold it here. NVIDIA bear flag is very potential here. NASDAQ rejecting 15 too. NVIDIA bear flag looks fine. Tesla downside still looks fine. There goes NVIDIA. Oh, here we go, man. Here we go. So, guys, a pretty big day for me. $8,000 day, and those were the 3 trades that I took. Sort of on the top scale of the big days that I have. $8,000, $10,000 days are really my big days. I don't trade with too much money. When I have this type of day, I take money out of the account. I put it into a high yield savings account. I save it for a real estate investment, right? That's the type of guy I am. If you don't know who I am, if this is your first time on the channel, you're never going to see $100,000 trading days from me. I don't take those types of risks. I don't have interest in taking $20,000, $30,000, $50,000 position sizes. Not really something I'm comfortable with. And I think that as a trader, it is very important to understand what you are comfortable with. Where is your comfort zone? And don't step outside of your comfort zone to try to impress others or try to fit in with some type of other trader. Now, there's nothing wrong with the people that take these risks. They're probably very successful at it, and they're comfortable in that, that large risk environment. But if you are not someone like that, and you're scrolling through social media, and you feel like you have to make $100,000 to be a successful trader, that is very wrong, and that feeling will most likely lead to you losing money in the long term. Stay where you're comfortable. If I can have an $8,000 day with comfortable risk that I am accepting of, I will take that all day. I don't need much more than that on a single day. So a really nice day for me. Very happy about it. Already withdrew money out of the account. Those were the 3 trades. I hope you enjoyed the video. Press that like button, subscribe to the channel, and I hope to see you in the next one. Peace.